Good morning. What's up, guys? How we doing? Welcome into the live. We are looking at NQ. This is, of course, a 5-minute chart. We're on bar 18, 15 seconds out. Didn't get anything here on 17. I was watching 17. Damn near almost sped up the loading screen here. But wicked way back up, close inside. We might see this thing range for a bar or two. But that doesn't change the fact that right now I'm max 2 bars out from a setup. So let's see what we get here on big 19. What's up with you guys? How we doing so far this morning? Hope you guys are all doing well. Hey man, hope everyone had a tremendous Christmas weekend. All right, man, let's get to it. 4.5 minutes out here. Big bar 19. Again, I'm going to kind of pop around the horn today. ATR here on NQ is a little bit better than what we've been seeing lately. We're sitting at 31 as of right now. But, man, ES, gold, YM, it's all on the table. Let's see what we can get. ATR over here on gold is 13, but we're range bound. A lot of wicks going on in the gold, the GC, that is gold. 5-minute chart. YM over here, let's just pop around the horn. ATR 37. Last Friday, ATR on YM was what, like low 20s? So doing a little bit better here today. And ES ATR on Friday was like low 2s, sitting at about 5.5. So much better as far as volatility here so far today. Let's see what we can hold up. All right, 19, come on now, what you got for us? Does your copier ever put you in reverse positions on stop out? Yeah, if you're using NinjaTrader, that's probably not a copy trader issue. That is a NinjaTrader ghost order issue. It's well known in the industry, though Affordable Indicators, which is the copy trader that I use, seems to be the only one that actually gives a shit to try to fix it. And they can't fix it because it's a NinjaTrader problem. And for whatever reason, NinjaTrader doesn't seem to care too much. Or they're working on it and they haven't come up with a solution yet. So the solution that Affordable Indicators came up with, and by the way, I feel like I talk about them a lot. I have no affiliation with them. I just like their copy trader. If you update your trade copier, if that's the one you use, they have a feature now that will automatically flatten a certain number of seconds after you get flat, and it detects that there's ghost orders. So that's how I do it now, though I need to speed it up because it takes too long. All right, minute 13 out here from the close of 19. Honestly, I think I'm watching for 20. Right now, I think the market is in a giant wedge. See that? So you got to keep an eye on that. Though I would love to be able to hunt the stops beneath, well, I guess the wick low of 9. Since the open, right? But you gotta be careful when you have a big, tremendous flat bottom like that. And to get beneath the wick low of 17 is what I would need. We're starting to get a little bit close to the wick low of 9 anyway. So I'd probably treat that stop hunt more like a regular scalp. If I get the setup here on bar 20. which means I need 19 to close nice and low. There we go. Good close. All right, let's see if 20 can put in another nice, clean, bare body. In the meantime, let's check out gold. Still in that little range. A lot of wicks starting from bar 11-ish. I like the ATR over here on gold, though. Now, you got to be careful on a day like today. If you're trading GC, you got to remember, that's $100 a point for a regular, mini. So, with an ATR of 13, you got to think about that. As far as volatility is concerned, all else held equal with a single contract, the ATR volatility risk is double on gold what it is on NQ. So if you're going to go back and forth, it doesn't have to be perfect, but you should be kind of close as far as risk. I'm not going to pretend like I micro adjust. If I'm trading 9 micros, I better adjust to 8 micros on gold or something to get it just perfect. No. I'm more so worried that I'm in the ballpark. All right, well, we're 220 out. There's quite a wick up top here on bar 20 here on NQ, which increases the risk, but not to such a considerable degree. I mean, ATR is 32. It's not 92. So, if the bears can take this lower, especially if they can close it just beneath the wick low of 17, I am interested. Seeing if we can stop on the wick low of 9, but I gotta remember there was kind of a flat bottom there. So I wouldn't necessarily want to put that on and then leave it on for some big massive swing trade that I think is gonna break through the wick low of 9 and then run another 85 points in, 4 minutes. You gotta be reasonable in your ask of the market based on the volatility, right? I think that's a big mistake a lot of people make. They're not very reasonable with the market. I did this too because I didn't understand in the early days. You put on a trade, and just because last week, what we would now call ATR, back then you just think of it as volatility, let's say ATR was 90, and now it's 17. And you're just cruising into work, you put it on, man, and you're like, I'm gonna go for 100 points. And then you get chopped up, you call it. You say, oh, I got chopped up today. No, you made unreasonable asks of the market, and it was a range environment. You're taking trend trades meant for a higher volatility trending market. You're in a lower volatility ranging market. You're putting on high volatility trend trades. That's a context issue, which is why that's the absolute #1 pillar of RAM. The first live training we ever did inside the tomb was context because it's #1. And so many people ignore it. It makes me cringe. You cannot ignore context. I did for way too long, believe me. It's too easy to ignore it. All right, 20, come on now. 10 seconds outer from the close of 20. Nothing. Big old doji over on gold, man. Yes. Well, YM. Well, I guess it's back to NQ, huh? We'll hang out over here. Come on, 21. Let's do something for us here, huh? Well, I mean, listen, volatility's pretty good. You know, I mean, 31, it's not like it's 61, but on NQ here. It's ATR, by the way. I can't really complain about volatility. Around the world, man, around the horn, all the instruments that we're looking at least are reasonable as far as volatility. I mean, especially gold, man, it's kind of up there today. The problem is we just need, you know, the market to kind of pick something and go. Or at least develop some kind of channel. I'll take a trend. We'll always take a trend, but I'll also take a soft bull or bear channel, man. Doesn't matter to me. But on the bright side, again, we're about 1 bar away from taking some at all times right now. 2 at the very most. I got to be careful here on gold, not only because of the volatility, but also, you know, I think even me, I look at this and instantly my brain says, I got to look for any reason to get short, right? And then my logical, simple RAM brain pops in and says, well, wait a second. I can't really do that until I get some kind of evidence that this isn't just going to be a thing, because this has been a thing for 10 bars, right? So just because you get 21 and 22 doesn't mean this range is just snapping up to the downside. In fact, the probability is a bit higher that it just maintains a range. So you don't want to get antsy, especially when, again, ATR and GC is 13, man. If you're trading minis, that's double the volatility risk of NQ as far as dollar-wise per contract. So, back to NQ here, while gold works itself out. Yeah, I mean, look, again, like, this looks really tempting, right? It's really, you know, it's so easy to get caught up in this. Big bear trend, good volatility. It's easy to look at 21, 22, especially if you're like a newer RAM trader who doesn't like really understand context yet, which is everything. And I just... Guys, like, the #1 lesson here about context. Don't get caught up in this looking at this. Make sure this becomes this again before you start being convinced. Right? What do we always say? When the market's in a range, I don't care if it's gold, I don't care if it's ES, NQ, YM, I don't care if you're trading crude, natural gas, man, I don't care. When the market's in a range, 80% of breakout attempts will fail, approximately. Remind yourself of that constantly. All right, we're about 4 minutes out here from the close of bar 23. Yeah, I mean, look, you can trade the range, but I don't like trading sideways trading ranges because they're way too close to 50-50. And, you know, the casino can make money off of you being really close to 50-50. If you're going to open a casino from scratch and the games don't exist yet, but you have this great idea, you're going to think about it probably like this. You're going to say, well, I'd love to have like 70-30 odds in my favor, but people will almost never win, and they'll just kind of dip and never come back. Everyone's screaming about YM. Hang on here. All right, I'll keep an eye on YM. Not too excited about it unless it gives me an actual setup. But if you're opening that casino, you got to think. What's our business model? Well, we need as many customers as possible because we need a big sample size to make money. A big sample size of hands dealt. Are you following me? But how do we get a lot of customers coming back all the time and get them fucking addicted to gambling? Because, I mean, straight up, isn't that kind of their goal? To get you addicted to gambling? Kind of fucked up, but that's their goal, right? They'll pretend like it's not, but it kind of is. How do they do that? Well, they got to dangle the carrot. So they give you like 52-48% odds. And then they just increase the sample size as big as possible. That's how the casino makes money. In trading, we don't have that big of a sample size. We can't deal you, what, 100 hands an hour? Maybe more if it's just you at the table. We can't take 100 trades an hour. You understand what I'm saying? Do you understand how I'm connecting this? I feel like a lot of this falls on dead ears when I talk about this. Because people are like, oh, like casinos, I lose when I gamble. It's like, no shit, homeboy. Try to keep up. Right? We're talking about the institution, the casino, the business. Right? We can't take 100 trades an hour, so we need a little more edge because our sample size is smaller. So in the range, it's way too close, like a sideways, especially single bar sideways trading range. It's way too close to casino odds, 50-50. Now, institutions and algorithms can take those because they can take a whole bunch of trades. It's fast, it's automated, that's their business model. As human retail traders, we can't really identify 100 good trades an hour. It's just not going to happen. And even then, it's like we don't really have the luxury of ultra discounted commissions and fees like institutions would, depending how they're executing their trades. Because they're volume, right? So we have to find things with a little bit more edge, which come around a little less frequently and do not necessarily usually reside in single bar, straight up sideways, 51-49 style trading ranges. I hope that makes sense. What I just explained, straight up, is probably the most valuable thing you'll ever hear as far as how to make money in this industry. Or more so, how you do make money in this industry. Now, actually, how to get that done is more like a methodology thing, and that's, if you want to dive into RAM, have at it, man. I encourage you to do so. But as far as business model, understanding what the hell's going on here, what I just explained is everything. And everybody who makes money understands this, right? But it's weird to me because I feel like this never gets talked about. You know why? Because it's boring. Because when I start talking about this, people trickle out. Because they're like, bro, just gamble for me. No, I'd like you to actually be able to provide for your family doing this because it's a really good way to make a living and a really good way to get a lot of money into your pocket and your community's circulation that it wouldn't have otherwise seen. Or you can sit around and be a gambling addict until you run out of money and can no longer sustain this. And then you quit day trading and say that day trading is a big fucking scam. Like the 95% who can't handle it psychologically. Take your pick! I think you know what I want for you. All right, YM, whole bunch of nothing. So we're back. Oh, God. To NQ, which is just about the ugliest chart I've seen. Ever. Not ever. Just about. ATR 28, not looking too bad. I guess we should check out gold, huh? Goodness. All right, so that big red number in the bottom right of your screen that says 28, that's ATR. That's the average range of a 5-minute bar here on NQ in points. We want that to stay above 20. All right, that stays above 20. We can actually get our job done here. Beneath 20, our job gets a little bit harder. Beneath 10, it's time to go home. Or I guess walk out of your office into your home. All right, 50 seconds out here from the close of 24. All right, so YM here is in a really soft bear channel. Almost so soft that I'm pretty convinced this might just turn into a sideways trading range. But if we can see a little bit of a volatility bump and then a nice clean bear close beneath the wick of 23, at least 2 to 3 consecutive bear bars, you know, then we got something there. Though, you know, it wouldn't be my favorite trade in the world because then I'm getting short at the low of day, which I'm fine. Actually, I love doing that. You guys have seen me do that a million times. That's a backbone, you know, RAM continuation, shorting low of day, buying high of day, not just because it's lower high of day, but because we happen to get a RAM continuation setup into it, into the low, into the high. When it's this soft, a lot of times what you can see is you can see a nice clean RAM continuation setup into the low. And if the context is transitioning into sideways trading range, it'll just fade back in and stop you out. Which is why I like it less and less and less the softer and softer and softer that channel gets. Because eventually, it's no longer a soft bear channel, it's just a sideways trading range. And that's where the context shifts. So we got to keep an eye on that here. NQ, you know, it's not going to do this all day. We just got to wait this thing out, let it do its thing. Gold still kind of bottoming out here. Not really sure what to do. And I would love to hunt the wick low of 11. Stop hunt it, but I'd need a setup obviously coming into that. So back to NQ. Let's see if the Bulls can get something done here. Minute 25 out here from the close of bar 25. Obviously, I need to see this clear well. Probably 26 as well. Clear the wick high of 18. And close nice and clean. Otherwise, trading range. Trading range, trading range, trading range. You always gotta, you always gotta assume. You always gotta assume. Not really. The breakout's gonna fail when we're in a range, right? Which is why for continuation, you guys are pretty much almost never seeing me take continuation trades like right on the outskirts of a very clearly developed sideways trading range. I'm always waiting for it to clear it and give us a nice clean close from at least one bar, if not two. 35 seconds out. Come on, 25. right, let's see what 26 can do. I think NQ is just in a straight up range. YM? All right, YM. I'll give you a shot. Let's see if we can take out the low. Wick low of 23. All right, we're going to let YM work. I will pop to NQ, leave that up, and I will be right back. 2 minutes. All right, welcome back. Well, let's pop back around the horn, shall we? This is NQ. Ooh. YM. All right. Well, I better get ready then here, huh? All right, let's pop over to the execution screen. Get ready here. 20 seconds out, copy trader. Engaged. Feels good to say that shit, huh? 10 seconds out. Go ahead and get my stop limit sell ready. And up. Come on, Bears. Close it low. Close it low. Close it low. Gonna take a second to roll over. All right, I'll go ahead and give that about 25 seconds, see if he can give us a fill. Reason for not giving it 30 seconds, bit of a wick down there on bar 26. You know, as well as that concern, obviously, of this is a very, very soft bear channel. And we'll go ahead and get a fill. Suck risk up. Right there. Boom, bring that up there. ATR here is 31. Now remember here, YM is $5 a point. So the sizing here really, it's not that great. Well, we'll see if we can break the ice here. Come on, YM, take us lower. Bulls trying to take it back up into the soft bear channel, that range. We'll let them try. ATR here on YM, by the way, is about 32. There we go, Bears. Minute 20 out here from the close of bar 27. $60 seconds. All right, let's see here. We're about 15 seconds out. If we get another clean bear close, I'm going to have to adjust my stop. Pretty wicky. It would not be a setup, so I gotta leave my stop up there at 741. Alright, 28. Take us down through. Alright, Bears. Step in, continue this baby downside. About that time. Yep, this is why I'm right now. I'm sitting short from the open of bar 27. Using a stop limit sell beneath the wick low of 26, right? All right, there's one bull body. We'll see how 29 closes up. Obviously, a single bull body is a no decision kind of bar for me. So we let it sit. Come on now, there's. Let's see if the bulls can try to take out. They got to earn it. The wick high of my signal bar, which was 26. ATR here on YM still sitting 29, just about 30. See if they can take out the wick low of 26. If the bulls can, I'll get flat, obviously, with that stop, and we'll check out gold and NQ. Alright, I'll get flat there. Yeah, YM, man, the size. I probably should have taken 2 contracts, to be honest with you. $2,000 loser of a small trade. Let's move on. Let's look at NQ. Nothing on NQ. GC was kind of the golden shot. Okay, is GC trying to reverse, man? I gotta tell you, I'm not too convinced. Actually, I did trade count. There we are. There you go, GC. All right, well, GC is in a soft bull channel, but if this closes up clean, I'm gonna have to put it on. So let's see here what GC's got. There's the rollover. Place that guy. Stop limit buy out. We will get a fill. Bring that stop. Place him right there. Bring that up. All right, ATR here on gold is 9.6. And let's see. Now GC, understand, is $100 a point. And YM was, honestly, the size I took was too small, so I'm going to leave my size the same here on GC. All right, gold, what you got? Take us up through, baby. Let's get that full ATR. All right, there's the open of bar 31. Little pulling is okay since we are in a big softball channel. But what I don't want is for the bears to take out the wick low at 29. That is what I don't want. Bulls, it's about time to step in and do your damn job, man. Oh, you bulls! Bunch of babies. All right, let's see if these bears can take out the wick low at 29. All right, there's the open of bar 32. All right, they'll cut it there. All right, let's move on. Oh, you bulls. You bulls. All right, let's check out NQ. What's going on over here? Oh my goodness! Oh, NQ. You son of a... That is ugly, man. NQ ATR is dying. We're at 21. What are we doing on YM? Actually, YM's picking up a tad. ES probably looking like NQ. ATR over on ES is 4. I think gold is my best bet right now as far as volatility is concerned. Alright, I'm going to stick around here on gold and see if it can give me something else. Keep an eye on the rest in the meantime. $250 out, by the way, until the close of big bar 32. $90 seconds here. All right. See this thing close up. See that wick low at 27? And you see how gold's about to close up right inside that wick low of 27? That means I wait on bar 33 and see what we can get. Now 33 gives us another clean bear body with a nice clean close. Then I've got a stop limit sell here for the bears on gold. ATR over on NQ is 20. Dead hesitation here on gold. All right, I'll be back in 2 minutes. Grabbing coffee. All right, welcome back. Nothing there on 33 here on gold, so we'll keep an eye on 34. And in the meantime, let's check out NQ. Not a whole lot. ATR now below, I should say, 20. Here on NQ, it's down to 19.5, which is not tremendous. YM. Yeah, I mean, right now, for me, the instrument to focus on is going to be gold. Ideally, 34 could give us a nice, clean, bare body without too much of an up-top wick. We'll see. If 34 ends up popping back up a little bit, we might be looking at just a sort of sideways trading range. Now that we took out the wick low at 27. All right, halfway through 34 here. Come on, Bears. Man, basically a doji here on NQ. ATR here on gold is starting to fall a little bit. We're down to about 8.25. See if this thing can avoid falling into the trap of a single bar sideways trading range. Man, look at these dojis on NQ. Those are not great conditions on NQ since bar 17. I'll tell you one thing. ATR there 19, by the way, on NQ. ATR here on gold, that's GC. February, of course, is 8.6. Two minutes out here from the close of bar 35. All right, 20 seconds out here. From the close of bar 35, let's see how 36 opens up. Come on, 35, stay beneath that with both 30. Do it, do it, do it. Are you closing one tick or so? All right, we'll take that. 36. It's all on you here on gold, man. Let's see if 36 can give us a reasonable bear close. And all of a sudden, that's another setup I gotta put on. Now the question of would that be a stop hunt? It depends. Yeah, probably not. That's pretty far. Probably not. It's a little early for a stop hunt. There you go, bears. Not too bad. NQ may be picking up a little bit in volatility. Still below 20 on the ATR though. See, it's tough here on NQ because ATR is starting to get pretty low, and they did. They just took out the wick low of 9, which is the low of day, at least after the New York Open stop hunt. And see how it only pushed like 3 or 4 points? That's pretty common as far as stop hunts in low volatility environments. Alright, that bar on NQ is relatively outsized. YM is a little more reasonable. Uh, 50 seconds out. Gold. Hanging out basically as a small bull body. Okay. $30 out here. NQ is a bit outsized. So, most reasonable trade right now, at least for me, is going to be on YM. I will get the copier engaged. Now, ideally, you know, I'll give it 15 seconds. And again, on YM here with an ATR of 24, that size is pretty small. But it's worth taking if I can get a fill. All right, no fill, no trade. We'll pull it, move on. Hop back around, see what's up. NQ. We'll see if the bulls try to take it right back up into the trading range. Again, that was the break of low of day, the wick low of 9, taking out a few of those stops. In low volatility environments on those breaks, the bulls will oftentimes at least try to take it back up. Honestly, I'd prefer if they couldn't. I'd much prefer if the bears could just take NQ off a cliff. Give us an ATR of like 55 here midday. That would be tremendous. Gold is just back and forth now, huh? All right, we'll keep an eye on everything here. All right, here comes the rollover. 37 into bar 38. ATR here on NQ still sitting right about 19. That's pretty damn low, man. Let's see, ES at 4, 3.7. All right, so we're 210 out here from the close. Bar 38, we're looking at gold, that is GC. And I gotta tell you, from bar 33, all I see is single bar trading range. So ideally 39 could open up and kind of dump off a little bit, but no more than like 10 points. And give us a nice clean close here on bar 39. NQ still kind of doing its thing. A lot of wicks, low volatility. All right, well, here's YM. ATR 25. See how it closes up on 38. All right, gold looks interesting, but that bar is starting to get pretty outsized. So I'd have to wait on 39 on gold anyway. So I'll pop over and see if we can catch a little trade here on YM. Sizing on YM is going to be pretty damn small, to be honest. But if it's there and we get a fill... Ooh, volume is slow here. See that open? See how it pulled back? I guess, open lower. What was that, multiple points lower? There's a volume issue on YM. Okay, so I guess we'll take a look at gold, huh? What's NQ doing? Doji, doji, doji! Alright, let's see how bar 39 closes up here on gold. So, if you're ever trading something like YM, and this does happen on other instruments as well, by the way. Just maybe not as often. And you get a rollover like that, and for some reason the new bar doesn't populate in NinjaTrader. And you're like, what the hell's going on? It's waiting for the first movement or the first order data to hit, which means that it's low volatility. I'm sorry, low volume. If there's a delay from the close of one bar into the open of another, it's waiting for more volume to come through to populate the first data of the next bar. And if it's taking a second, there's usually a volume issue. Which probably means you're not going to get as good of fills, which can be an issue, obviously. That doesn't happen too often on NQ. You know? Gold, maybe sometimes, yeah. But, especially NQ, probably the least common on that one out of all four. NQ, ES, GC, and YM. Alright, 3 minutes out here from the close of bar 39. Let's see what we get. Oh, by the way, big news over at Apex, man. They're 90% off. Did I not say anything? Apex is 90% off single day pass. Code BIG, baby, B-I-G. Christmas came late. The New Year came early. This is their 2026 sale. All right, we're 90 seconds out here from the close on bar 39 here on gold. That's GC. Seconds out here. Well, not much going on there on gold, huh? NQ, you know, I gotta tell you, ATR on NQ is holding 19. Now, 19 is not good. It's low. Beneath 20 is, well, there you go. There's the dip to 17.5. The lower that ATR gets on NQ, man, the less excited I am to trade it. Yes, ATR about 3.5. It's getting kind of low. Well, let's see how bar 40 here closes up on gold. Let's see how it closes up. 45 seconds out. We do have arguably 3 or 4 touch points. All this kind of a newer channel. Short-lived, I think full-blown. We're looking at a giant sideways trading range, right? But the more recent context to me, as far as a scalp, is soft bear channel. So let's see. We got 7 seconds. Those closes. ATR is 8, by the way. All right, I'll go ahead and pop that out. I will go ahead and risk. There. Pull that in. And let's see what we can get here on gold. ATR sitting 7.8. Yeah, by the way, I'm looking at gold right now. This is GC. I understand that the symbol in the upper right says NQ. I know that, I'm aware. But this is GC, baby. Alright, you bears. Fade that son of a gun. Two and a half minutes out here from the close. Bar 41. ATR is 8. All right, there's the open of 42. I'm on 42. Fade that son of a gun. Question, how long did it take you to be so stress-free and calm in a trade? Well, I'll tell you what, I mean, I guess realistically it took years, but I don't think for me it was about the time. For me, it took years and years of pain over and over and over, mistakes, doing the same dumb thing over and over. I think the reason that I don't care that much and I'm just able to do my job and move on, unlike so many traders, is because I have the confidence in the methodology that keeps me going. Okay, when you know that in a big sample size you're going to do well, there's not a lot of pressure on any individual event. Now, I want to win. I don't want to lose this trade, obviously. You know, like, if the Bears can fade this, that would be tremendous. But, like, everyone cares too much. You give too much of a shit about what happens on any given trade. The reason you care is because you are insecure about your long-term outcome. You're insecure about your midterm outcome because you don't have edge. That's the problem. You have to trade a reasonable, logical methodology that with a midterm and long-term sample size, it treats you well. When you get there, you will not care about the individual outcome, at least within reason. Again, I want to win this trade. I don't want to lose, but I don't really give a fuck. Because I know that you're going to lose 2 trades in a row sometimes. I know sometimes you're going to lose 5 trades in a row. It's just the way the statistics land. It's always going to happen that way. All right, we're 40 seconds out here from the close. Bar 42. There's the open of 43. There is no decision that I need to make on 42, so I got to let it sit and see what 43 brings. Yeah, this is gold, this GC. All right, you bears. Let's see if the bulls can take out the wick high of 34. What would you say is your one method? I trade RAM, man. Come on. If you're here, you ought to know that by now. All right, Bears. Damn, these bulls, man. See if they can take out the wick high of bar 34. All right, bar 43 is a wiki small bull body. Means I have to let it sit. On the average trade, are you in a position for more or less than 10 minutes? Well, the average position, well, it depends. Are we talking about the median or the average? Okay, the average probably gets dragged up to that region, that 10-minute region, because some trades on lower volatility days take a bit of time. Though, if you've been watching for more than 2 days, you would know that there's a lot of trades, like particularly on NQ, where I'm in and out with like 40, 50 points in 25 seconds. So those, you know, there are quite a few of those. So that would bring it down. So the median is probably beneath 10. The average might get dragged up to that region around there because the longer trades. Like there are some trades that'll take an hour. You know, that's not ideal, of course. But in lower volatility, you know, gotta work with what you got. All right, Bears, see if we can fade that thing back. Oh, you bears. All right. See if those bulls take out the wick high at 34. They will, and we'll get flat. Getting murdered here, man. All right, that's trade number 3. What else? What else? How will I ever recover? Man, ATR on NQ is 16. That's crazy. YM? All right, YM. ATR 22. ES, let me guess, 2.9, 3.2. All right, well, I guess let's hang out on NQ, man, huh? ATR here on NQ is 16. That's pretty low. Oh, man, old. Wick. Yeah, you know, I mean, YM is looking reasonable, but remember, we had that volume issue over on YM. All right, guys, well, I'll tell you what. While this is going on during the midday low, I guess it's time for me. I'm going to go hit lunch. I'll have a good time. Hey, we'll see what the afternoon here brings. See if volatility picks up a little bit. Let's hope it does. If you're having a bad day, it's okay. First time? Welcome to the red days. All right, guys. Hey, don't take it too seriously, man. You'll be back at it before you know it. As long as you're doing reasonable things. Don't go start gambling. Okay, that would be unreasonable. All right, guys. I'm off to lunch. Subscribe to the channel. See you in the morning. Have a good one.